Hey, everybody, this is Carl White, broadcasting from the secret headquarters here at the Mortgage Marketing Animals / Freedom Club. And you are listening to Loan Officer Freedom, #1 podcast in the world today for loan officers. And all thanks to you guys. I really appreciate you sharing the message and sharing people the forwarding the podcast to your loan officer friends. You're the reasons why this is literally the #1 downloaded, #1 reviewed by far. And we also give ethical bribes, Kristin. You know that's I'm not going to be dishonest about this. We do give ethical bribes that after listening to the podcast, give an honest review of the podcast. Right? We like the 5 stars. We just say an honest review, and I'll send you a Yeti type mug that says the Mortgage Marketing Animals, which we're powered by, and it looks like a Yeti cup. Pretty darn good cup, actually, but we'll send it to you absolutely for free. Leave a review and then email us at support@themarketinganimals.com, support@themarketinganimals.com. And we will send you, send a picture of your review. And again, it could be like whatever, any review. But all reviews get a free Yeti type mug that says Mortgage Marketing Animals. So I normally put that at the end of the episode, but I thought I'd try it here at the beginning. But anyway, so thanks for being here. So you're listening to the right episode. If you want to hear a conversation about how do I get back to my 2021 production? How do I get back to my 2021 production? And I'm joined here today by Kristin Simpson out of Pennsylvania. How you doing today, Kristin?
I'm doing well, Carl. It's always fun to be here with you.
You are doing well, and you're a main player on our Loan Officer Breakfast Club that we have every Monday through Thursday for the mortgage world. It's we got a lot of free cool stuff, don't we?
You really do have a lot of free stuff.
Yeah.
Yeah.
So
I love the Breakfast Club.
Yeah. So it's loanofficerbreakfastclub.com, loanofficerbreakfastclub.com. And we have hundreds of loan officers all show up on a free open to any loan officers, but only loan officers, every Monday through Thursday, and for 30 minutes before you start your day, just kind of like, what do I do? And Kristin has a segment there we affectionately call Kristin's Corner, because you're just a really smart person, have a lot of great ideas, Kristin, which is why I asked if you would chisel in some time to your schedule and join us today. As you're one of our great loan officer trainers over here at the Mortgage Marketing Animals. And I thought what we'd talk about here today is how you talk to a lot of loan officers, like a lot. And some are having a hard time right now. And some are having their record year ever. And some are closing, some just got in the business yesterday. Some are closing 20, 30, 40, 50 loans a month. Some are branch managers. I mean, pretty much all around, brokers, bankers, like all around the gambit. And so you talk to way more people today than I do, for sure. Can we agree upon that?
Probably.
Yeah, probably. Yeah. How many people do you talk to on a typical day? Like how many, because you're doing strategy calls of how to ramp up their business. Like how many people are you talking to a day?
I would say between the strategy calls and following up with people and checking in, probably 15 at least.
Yeah, that's a lot. Like if you do 15 a day and then times a week, times a month, it's a lot of people. So you get a great perspective that very few of us will have that perspective, because you get to see what's working and you get to see what's not working.
Right.
So that's what I want to talk about is I want to get back to my 2021 production levels. Let's start with, while we were in the green room before we hit the recording, you mentioned something about proactive versus reactive. So Kristin, I want to get back to my 2021 levels. I was closing, you can insert any number really, but let's just say I was closing 10 and I find myself at like 3 or 4, or I was closing 50 and I find myself at 15. What do I do here?
Well, there's a couple of different ways we can pivot, and everybody's situation is different, right? Everybody has a different size database and different referral partners and things like that. And I think one of the big pieces of this right now is if we're trying to compare today to last year, well, it was super easy to be reactive in our business last year because our phones were ringing off the hook. It was that season of mortgage. It was all about how many can I do? It was all about capacity. And we're in a different season right now, and it's all about the phone calls. I can't just wait for the phone to come, to start ringing for me. I got to go out there and be prospecting. I got to be proactive at this. I got to have a plan of action. And, I was kind of mentioning to you, the way I see this, if I want to originate a loan, I need to be having one of two conversations. I can either be talking to a client who's looking to, buy, sell, or refinance. And that can be somebody in my current pipeline. Maybe they're pre-approved. Maybe it was somebody that I've helped out before in my database, or somebody who I got a referral from. Or I can be talking to a referral partner, like a realtor, who can refer me to a client who's looking to buy, sell, or refinance. And so then the question becomes, okay, if that's how I originate loans, by having those conversations, I need to make sure I'm spending time in that zone consistently, like every day.
So, man, that makes common sense. 'Cause I on just a couple episodes ago, I think I brought up the number. If I remember right, I had the number in front of me off the top of my head. I think it was 67% of all mortgages are done by the loan officer that the real estate agent referred. 67%. So let's just round up, say 70%. So 7 out of 10 mortgages were done by the loan officer. The realtor said, "Hey, that's my lady. That's my guy. I trust this person."
Yeah.
And which probably didn't have the lowest rate. Like, I don't know who has, I don't have nobody has, quote, the lowest rate, I guess, on any given day, So it's not by who had the lowest rate or who had what insert in thing. It's the person the real estate agent said, "That's my lady, that's my guy, that's who I recommend." And to not work into that conversation and leverage that on our behalf as a loan officer is just crazy. I mean, that just seems like the biggest no-brainer thing to do. So if I want to be proactive and enter into that conversation, like, how do I do that?
Well, and that is where this daily success plan comes into play, right? So if I'm having those conversations is how I can originate loans, I want to spend time in that space, then who am I calling? What am I saying? How am I getting business out of that? That's the daily success plan. That's what we're working Monday through Thursday over here. It's just teeing up those conversations so I can have an opportunity to either ask for referrals or ask for more business.
What do you say to the person? Every time I do these kind of things, I always think the listeners are having, I call them the yeah buts. Yeah, but insert in thing. So what do you say to the person that says, "Yeah, but I don't have a way to get these agents to start referring to me. I don't want to do the pay to play thing where I'm renting desk space, and I'm kind of newer in the business. So as far as like meeting with these real estate agents and mapping out their business plan, hell, I don't have my own business plan, much less mapping out a realtor's business plan. I can't call and reach out to these agents because I don't have referrals to give to them, and I don't know enough to write out a business plan. What do I do now?"
Well, I mean, you said this best, Carl. I learned this from you. You said there's one of two things you can do with being new. You can either try to pretend it's not the elephant in the room, or just put it right out there and use that as a reason to reach out. Right? I've been hearing great things about you, man. You're killing it in the industry, and I know that I'm better when I surround myself with people like that. I know I have a lot to learn from you. I'd love to buy you a cup of coffee, hear what you're doing in your business, and pick your brain a little bit.
It's amazing on how simple things like that work. I think a lot of times you're right. We try, I know in the past I did, when I first got in the business, I tried to kind of hide it. I was never dishonest. Like if anybody came out and asked me how long, like I would say, "Well, boy, it seems like forever," when it'd been a couple months, Yeah, but how long? Okay, you got me. It's been a couple months. It's been a couple months.
Right.
But God, it seems like it's been forever, even that couple of months. And I found when I was straight up and honest with them, which is it's the way I do things anyway. Gosh, it worked out really well. Like it's they they kind of put their arms around, not figuratively speaking, they kind of put me under their wing, and that worked out really, really well. So
because I think we all remember that emotional feeling of being new somewhere, right? And I think that's if people won't remember what you said, but they will remember how you made them feel, right? So I think we all remember that feeling of, I'm new, I'm not quite sure, I know that I don't know everything about this industry, but I know that this is how I start my business. And when you reach out to somebody like that, and you can connect with that piece, like, I'm newer to the business, but I know you're killing it, and I need to surround myself with people like you. Could I pick your brain? That's really hard to say no to, in my opinion.
I think you're right. And one thing that I found out, that when I found out, it totally made sense, but I thought it wouldn't be. And that's, these top producers, they actually are nice people. Somehow I had painted them to be like these big ogres and bullies, and I suppose a certain percent are, right, of any group of people. But come to find out, they were actually nice people, which only made sense because they probably got big because they're attractional type people. And you attract people by being nice.
Yeah.
And if you're a mean SOB, right, you're going to repel people, and likely you never would have a lot of business come in the first place. So as a general rule, they tend to be, nice people. And so anyway,
right. And when we're newer, we're thinking, what do I have to bring to the table? What can I offer? Well, that's not why we're calling.
Yeah. So what about so I know we need to call agents. What do you think? Like, when you talk to these loan officers, I guess at this point, hundreds, or gosh, you might have even done 1,000 or more, at this point, if we do the math on how many people you talk to a day. What's keeping them from making that phone call now? So the person that's listening, and they're not partnering up with these agents and get them to start referring to them, what's holding them back from doing that?
Well, I think one of the things is what you just said earlier, was we feel like we have to have a value added, and then it's not so much, it's knowing what to say, that too, right? We feel like we have to be offering something. We don't know what to say when we pick up the phone. Maybe we're not sure who to call. I think it's all of that kind of combined creates this. Well, let's create scenarios in our head now of why I shouldn't call, because they could say this, or they could be mean, or this could happen. And those, we can just go nuts with that kind of stuff.
Yeah. I know sometimes I'll be talking with a loan officer, and they'll go, well, what about, and they'll put a scenario, and I'll give an answer. Well, what about, and I'll say, hey, hang on just a second, Bob. And hypothetical Bob, Bob, let me ask you, has anybody ever actually given that objection? No, but they might. Well, I tell you what, let's play this another way. Why don't you go ahead and make the calls, and then write down the objections they give, and then we'll have a call and overcome those objections. Oh, okay. And those, it's like, well, what if they're a one-legged midget driving a yellow Volkswagen? It's like, dude, whatever, just like, let's just start making the call, and let's see what happens. Yeah. And usually all these horrible things and the horrible possible ways the conversation go in my head, they just simply don't happen, so I find that to be the case. What do you find the issue of like they're working on 50,000 different things to avoid the very one thing that actually makes the most money? Is that an ongoing issue?
Creative avoidance. Yep.
Yeah.
Oh yeah.
How do I conquer that? So I have this. So it's not that I'm attracted to shiny whistles. It's just when I'm attracted to, I lean towards shiny whistles because they keep me from doing the thing that I truly know in my gut would really benefit the business most. How do I overcome that, Kristin?
Well, I think this is when we say reactive versus proactive, right? It's real easy to come in and let's open up our emails. That's the first thing a lot of us do. Let me see what emails I have, and then I'm going to listen to my voicemails and maybe see if any applications came in overnight. And then, I'm going to go out on social media and I'm going to watch some videos on YouTube and maybe share some realtors posts. It's lunchtime. Let me go do that and come back. Then I got more emails again. Maybe somebody liked the post I shared, or a realtor responded to me. So I'm going to do that. And none of that is wrong. I'm not trying to judge people for that. I get it. But it just the first thing to go on the back burner is picking up the phone, and that having those conversations, we talked about this earlier, that is where I want to be. If I want to originate, I have to be having those conversations. So having a plan of action that puts you in that proactive conversations, picking up the phone. You said the rule of, I believe it was 65.
Yeah.
Somebody taught you. I love that. I tell people about that all the time.
Once you repeat that.
Oh, I like the way you tell it better.
So the rule of 65?
Yeah. I mean, we say 13 hellos here, but it's really the rule of 65 too. It's the same thing, but
yes. So the rule of 65 is to call 6 people that you know that can refer you business, and 5 people that you don't know that can refer you business.
Yeah.
And so the 6 people I know would be agents, maybe that's referred to me in the past, maybe a title company, maybe my past database.
Yeah.
Like I can't say, well, I'm going to call, like, you're a buddy of mine, Chris, and I can't call my buddy Kristin and count that as one, because if you're just you're not somebody that's talking to borrowers all day long. I need, like, that 6 people needs to be somebody that's been that talks to borrowers. So it's either an agent, an attorney of some sort, a financial planner. I mean, my favorite one is real estate agents, because I always thought realtor's always been my favorite one, because I go back to that 67% of all loans are done by the person the realtor referred. I love swimming downstream. I'm not a swim upstream kind of guy. Like, I want to do, like, if there's an easy way, I want to do the easy way. I don't want to do the hard way.
Right.
So that, anyway, that's the rule of 65. It's just calling 6 people you know, and then 5 people you don't know. It's not that hard to do that, So
especially when you have a plan. So it's just prioritizing that. It's saying, look, I know that is so important to my business, having those conversations, that I'm going to do that before I get involved in anything else. And when I can do that, and I remind people, it doesn't have to be perfect, right? But can I be more consistent than non-consistent? That's going to build momentum, and that's going to pay off over time.
How do I be consistent?
Well, you align yourself with people who are pulling in that direction. That's for sure. I've definitely, you see a substantial difference with people who align themselves with like-minded people.
I really like that. I just got to do a shameless plug for our MMA Call Stars. So
oh my gosh.
Why don't you? I was sitting there trying to think of another great example, because it's like it's like a flock of geese. They fly in a formation, and I don't remember the number, but the reason why they fly in that specific formation is they can fly further, faster, with less energy, because they're riding in each other's drafts. Here's a cool thing that a lot of people don't know is that when you hear the geese honking while they're flying in that formation, the lead goose isn't honking. It's all the ones behind that, him or her, whichever one's flying first. They're the ones doing the honking, because it's like an encouragement thing. So the one in the lead, which frankly is working the most, because they're hitting the wind and starting this draft. But then all the ones behind that one encourage that first one to keep going. I'm assuming they trade out at some point, and rotate that, whoever's in the lead. Hell, I don't know. But I thought that honking thing, and the lead one's not honking, all the others are in encouragement of the first one, I thought was probably a pretty fascinating story. Tell everybody just briefly what the MMA Call Stars is, and how that can help.
Oh, well, we have an East Coast and a West Coast. So this was a call, I think it's been about 6 months now, right, that we started doing this. We're all making these daily success plan calls together, right? So we decided, let's do a Zoom meeting, let's hop on together. So the first 10, 15 minutes, maybe, we just talk scripting in the day. We have one of our one-on-one coaches on there, and we get focused. Here's what we're saying to, whether it's database day, here's what I'm saying to my clients today, or calling out to realtors. We just hone in on that activity. We put the blinders on, and then we mute ourselves. And for an hour and a half, you can't hear anybody, but you just see people making their calls. You see people doing the right activities, and you're right in there with them. And then the chat starts to go with people's wins, people booking meetings, getting referrals, having conversations. And it's really encouraging. It's that camaraderie. And I think a lot of us are kind of on an island. We might be part of a team, but it's our own business. We're on an island. You don't have to be. Align yourself with
Mm.
other people. And then the cool part about that is, right? So one of our coaches is checking out the chat as the call goes on. At the end of that call, after about an hour and a half, we unmute. When there's a win in there, we tell everybody what just happened. Tell how big was the fish, that type of scenario. So we can all glean something from that, pull something, encourage one another. And also it's an opportunity to get immediate feedback. If someone comes up on a call and you just weren't sure what to say, weren't sure how to pivot, needed something from that, we got a whole group of people who are ready to help you there.
Yeah. Yeah. It's been a fascinating thing. The other morning I was on it, and at the end of it's 2 hours long. Mm-hmm. And at the end of that 2-hour call, there was 77 leads and these aren't just like Zillow leads or Facebook leads. These are referred leads, which as a general rule, referred leads close at about 25%. So referred leads are at 25%. Zillow and bought leads and online leads, stuff like that, are somewhere around 1 or 2%. So these are like 10 times more likely to close. So 76 referred leads, part of the 67% of all people buy or get their mortgage through their realtor referred. These are 76 of those. So in that 2-hour period, the people on the Call Stars, the loan officers on the Call Stars got, it was either 76 or 77. I think it was 77 leads on that 2-hour period. That's amazing.
That is amazing.
So that's likely. I'm not cheating. I'm not using my calculator. It's just taking me a few seconds here for my genius brain to do the exact number here. So if it was 76 leads and it was 25%, that'd be 19. That if you fast forward 30 days from now, that would likely be somewhere around 19 closed loans from 1 2-hour a set of phone calls that these loan officers do. That's an amazing number.
That is amazing.
It's about like it's going into the draft and following up people, because really there's really 3 groups of loan officers. And I got this from a buddy of mine, Todd. We were talking the other day, and he said, Carl, there's really 3 groups of loan officers today. There's going to be about half they're going to get out. Right. And it's such a shame to see them leaving, because it's such a great business if they would just simply do the activity. And then there's another group. The second group is they suffer until the market improves. And, the problem with those is we don't know how long the market's going to improve. And even while the market is down, we're seeing loan officers having literally their best months ever.
Right.
We were recently, and I think I shared a story here a couple of weeks ago, is we got a loan officer that was a band director 9 months ago, and the cat made $19,000. I think I just interviewed him, or I'm getting ready to interview him. I can't remember for the podcast episode, but the cat made $19,000 last month, and just got into business. Right. So 3 groups: get out, suffer until the market improves, or the third group is learn new skills and innovate. And I'd say, making these phone calls is definitely a new skill. Kristin, let's say, so my business is down a little bit. And we talked a little bit about the proactive versus reactive. Give me 1, 2, or 3 actionable items to do right now to close more loans. Like to get more leads to close more loans, like right now. Give me a couple. Go do this.
Well, if you have a substantial database and you're not staying in front of them, meaning you're not picking up the phone and making a connection with those folks, that's one of the first things you can do. And drip campaigns are fine. That's part of our process over here too. But actually picking up the phone and having a conversation, that's one thing you can do. Number 2, if you don't have the number of realtor partners that you need to get the production that you want, or I have the same number, but I don't have the numbers, closing, I'm not getting the referrals that I was getting last year. Let's get a qualified list. Let's get an updated list of people who are actually doing business right now, so that I can look at my Focus 40 or my realtor partners again, and I can build it up to getting those builders who are qualified.
Do you find, like, on calling the database, or, I think a lot of people have a misconception of that as well. I refied them all
I
last
hear that
couple
all the
years.
time.
Yeah. So what's
Yeah.
what's your answer to that? Kristin, I refied them all.
Yeah, it's not about the refi. When you call somebody after a transaction and you ask how they're doing, it sets the tone that it's not about that life event. It's about a lifetime of events. Is this a transactional relationship with you, or are you building a database of people that you can help, because they all know people you don't know? It isn't about that one event.
Yeah. Yeah. I found, it surprised me when I started working my own past database, that most of the loans I closed on my past database wasn't them. It was their friends, family, coworkers, right? That's part of our script, friend, family, coworkers. And I also found out that in the refi times, they refer me a lot of refis, but when we're not refining, they refer me a lot of purchases, because it's either their kids or their mom or their brother or somebody at work. And so, yeah, it's a funny thing that happens when we start calling our past database, using the right scripts. It seems like that works out pretty well. What's the biggest roadblock that you see that loan officers are having to overcome to get back to their 2021 levels?
I think it's truly a numbers game. If I don't have the production I need, well, then I pick up the phone and start growing more relationships, reaching out to more referral partners. And I think that piece of it can be a roadblock for a lot of people, because they say, well, I have 30 referral partners. Okay, but is your production what it was? Is it where you want to be? Because if it's not, then we have to pick up the phone and build more relationships. And that is the difference, Carl, between being interested in our business or committed to our business. Because when we're committed to our business, we're going to do the activities that allow us to originate, no matter what excuses we have there. And if I know that having those conversations is what's going to tee me up to originate loans, then I can't have enough of them.
It goes back to that old saying, if the and I learned this from a dear mentor of mine from years past. His name was Greg Frost. Those who've been in the mortgage business as long as I have will know who Greg Frost is. But he told me one time, he said, Carl, if the gold's running a little thin, you need to put more ore on the belt. And man, that's been so true over the years. That rates are high right now. Awesome, it's high for everybody. So gas is high too. But I'm not sitting here, waiting until gas goes down before I put gas in my car. People have to live in a house, right? They have to live in a house. And I know when Maria and I were, how I first mortgaged, this is a true story. Our first mortgage was somewhere around 16%, something like that. Because that's what it was. It was a VA loan. That's what they were I'm dating myself here, of course.
It's probably in the mid to late 80s, right?
That's exactly that's exactly when it was. Yep. It was in the 80s. And that's just what it was.
Yeah.
I remember when they went down to 10, I said, honey, if we're going to buy that big house on the hill, now's the time to do it, because it will not stay this low forever. Right. Because that was low for the time.
It's all relative.
It is. It's all relative. And, sell what's on the shelf. People say, well, Carl, what do you think the market's going to do? I don't care. The market doesn't affect my business, because if less people per 100 are buying a house, I need to talk to more 100. Right? I mean, it's just real simple. And the good news is I can do that by tapping into realtors' databases, because each realtor on average has 300 people in their past database of prospects. So when I tie into each real estate agent, that I've just tapped into 300 more people. So if I want to market to 1,000 people, I just got to market to 3 of the right real estate agents, and there's another 900 or 1,000 or somewhere in that neighborhood right there. It's really easy stuff. I think that the basic synopsis I'm getting from this episode, this is really not that hard, and we just have to do the activity and understand that the fish aren't jumping in the boat this year like they did the last year. And that this year we have to work hard enough to make the kind of money that we made the last couple of years, frankly, not working that hard. Yep. And it's just a matter of just doing it and trying to wait out or blame it on the market. I'm pointing my finger in the wrong direction. I got to point my finger back to myself. My actions, my activity, that's what dictates our income, not what the market is or what somebody else is doing. It's 100% up to me, right? Is that fair enough?
That's fair enough.
Yeah.
Exactly.
Anything I should have asked you? We see we're coming up to on top of the hour here, Kristin. Anything I should have asked you today that I didn't? Did I miss anything? We covered anything?
I don't think so. I mean, I think we pretty much covered it all. I know you've said to me before, be gentle. And I'm not, it sounds judgy sometimes, but one of the things we want to do here is help you take a good look at what you're doing and not point out where you're falling short, but where do we have opportunity? Where can we make up ground? And so if that's what you're struggling with right now, if that's what you're looking for, if that's what you're yearning for, if you want a very clear plan, then give us a call, because that's what we do. I want to walk you through it.
I was talking to somebody the other day, and I told them, actually it was to a group of people, and I told them I love you enough to put our relationship at risk by telling you just what you need to know. And that's one of the many things that I really enjoy about working with you is, you just say it how it is with love and respect. But I'm not looking for a yes person now. I'm looking for somebody that can help me out. So,
that's exactly.
Yeah. Well, Kristin, I really appreciate you being on here. Hey, if you'd like to, so we actually have a complete business plan that myself or Kristin will literally map out for you step by step of exactly what to do. If you go to dailysuccessplan.com, it'll walk you through a couple steps, and we will map out a literally paint by numbers blueprint of exactly what to do each day, and what to do. Like, here's the activity you do from 9 to 11. Here's the activity you do from 11 to 1. Here's the activity you do from 1 to 3. Like, we'll map out exactly what to do. And frankly, we put together this list by doing nothing but interviewing hundreds of the top producers across the nation, literally in every state in the nation. This is what they do. And we looked at the commonalities of what they do, and that's how we put together the Daily Success Plan. And that's the exact plan that I use in my own personal branch. I'm a branch manager. I think everybody knows that, of one of the top branches in the nation. It's how I did it. It's not that I'm just being perfectly transparent, I'm some genius that came up with all this stuff. I just looked at what the top producers were doing, and over and over and over, that were duplicatable. And that's how we put together a Daily Success Plan. And we'll share it with you absolutely for free. If you just go to dailysuccessplan.com, we'll walk you right through that. Kristin, thanks so much. It's always a joy to talk to you. And I look forward to our next episode.
Bye.
All right. Bye-bye, everybody. Thanks again.